Hello and welcome to another video update here on our Asia channel. Today we want to take about the Nikkei again. Nikkei has performed really well over the last few sessions, and if you recall from previous updates, I think we only made one about the Nikkei on this channel, which was very popular. We have not broken any support level, not a structural support level, not a Fibonacci support level, and also I said it seems likely that the market will aim for this level around 54,370. And we are on our way, of course. Now, of course, this week is interesting because of the talks of partnerships between the US and Japan. So there comes some additional volatility. Yeah, it's a complete volatile week anyway. I mean, in the US, we've got also the Fed interest rate decision today. Certainly this is going to be interesting. So let's zoom in a little bit. In the last video I shared with you the bigger picture. In this video I only want to take a look at the structure from the April low, and quite similar to the US indices that we're covering as well on other channels. The move to the upside is characterized from the April low by very, very short and shallow pullbacks. So it's very difficult to really come to one very clear Elliott wave count. That's my take. I mean, it works. At the moment, we have to be pragmatic about it in these cases and not look for the perfect wave count. I'm sure it will get adjusted at some point. But for now, it's about understanding what are the key levels, what is support, and what's the trend doing, right? And what are the levels that need to hold to keep the trend alive, and what are the upside targets, which I already mentioned to you. Now, based on the internal structure, we can identify some additional targets, because what we can do, we take the length of the A wave with the Fibonacci extension tool, we go to the low of the B wave, and then we'll see if we find any alignment. And interesting is that exactly this area around 54,440 offers some confluence, because that's the 100% Fibonacci extension. Yeah, and this would be an ideal target for the C wave, and the C wave should be a 5-wave sequence, and we have already seen waves 1, 2, 3, possibly 4 and 5. The only thing that I don't find ideal is that the 4th wave is very, very weak. This is, I think, the pullback we talked about in the last video update here. Maybe we were already starting to move up, I think. But overall, this was a corrective pullback. I'm not sure if this is already the wave 4 or if we are still extending in the 3rd wave. So that might be a reasonable alternative scenario, that we are still caught in the 3rd wave. I'm not saying it's less likely. I mean, we just have to, for risk management purposes, to understand that, yeah, in the short term, higher is still somewhat likely and expected, to move towards this resistance area, and then we have to see how the market reacts there. I think it can make sense to add support for orange wave 4 to be prepared for a pullback. If we get a pullback, we need to understand what is the level that needs to hold to keep the local uptrend alive. And what I normally would use is standard support for a 4th wave, and that would be within a possible diagonal pattern, because we don't want the market to break below the 61.8 retracement. That's at 45,255. But I have to say, this whole zone will be relevant, starting at 48,993. I have to say, this support zone will also have to be adjusted with the price as we go higher. So it's only an estimate for now. It's only there for your orientation. If we continue to move higher, this support zone will have to go higher as well. It's also important to mention that in any wave 4, I don't think the price necessarily will max out the support area, because we need to have the right proportions. So we would probably have a test of support at some point, but in the upper area. If this really is a 4th wave, we get further upside continuation. The deeper we go in this support area, the more cautious I would get. That means we have some additional structural support levels as well to watch. 30th of September low around 44,400, and then the 46,500 level is the swing low from the 15th of October, which kind of overlaps with the 50% retracement of our support area. But as I said, we might not even have topped yet, so we will have to adjust this as we go higher. My expectation would be a move towards the 100% extension. Yeah, that's the update on the Nikkei. Hope you enjoyed the update. Make sure you also subscribe to our other channels. If you find the analysis interesting, you will find them, or some of them at least, listed at the end of the video. Thanks so much. Bye-bye.